Michael, how are you doing today?
Good to be here.
Yes, it's great to have you being here, speaking at our conference in Toronto. It does help with the gold price being at over $4,200.
Can't take all the credit. We'll take the gold price helping us out.
Yeah, so tell us a bit about your background for people who haven't heard about you before.
Yep.
Because you've been talking about this sector since 2018, you said. So it's been a few years, you've been drumming about it, but now it's a good time, obviously, but you've seen some more slower movement in the past. How's the experience so far in the last 3 years?
So I've been an institutional money manager for about 25 years. 18 years as a professional fund manager, around about $1 billion for high net worth pension plans. And then in 2018, I quit my job and I went all in on junior resource stocks, gold mining stocks in particular. And I said I felt like a farmer the last 7 years who planted a bunch of seeds. The sun was shining, perfect amount of rain, nothing was growing. And then finally in the last 6 months, investors are finally waking up to the amazing opportunity in gold stocks. So I always invested in commodities. The last 7 years, basically full-time in the junior resource sector. I'm a member of a bunch of boards, largest investor, about 25 companies. So I've really been advocating for this sector for a long time. And it's nice to see that the investor interest is slowly coming back to us.
Yes, you mentioned, I also see that from the last few months, similarly, like the disconnect, right, we call it, because the metals price is always going up. The last few years, gold price is trending up, but the stocks is not moving as much. So do you understand what really happened over the last few months to suddenly we got the institution and retail money start pouring in the market?
So if you look at the gold price move from 2018 to today, it's gone from about $1,300 to $4,200. But all that buying was by central banks. And central banks don't buy stocks. They buy physical gold. And the retail market, I think, was very distracted by crypto, by AI, by technology shares. So all that speculative money that usually would have come into the sector was not coming in. I think when gold went through 3,000, everybody thought it was going to be just a flash in the pan and come back down. When it kept on going, I think that gold price finally pulled investor interest into the space. But I still think it's very early. I mean, you do this a long time yourself. We don't sense it's a mania. I don't sense a credible amount of interest, but it's slowly coming back. And also the silver price was a good proxy. When silver went through 40, now through 50, that to me is always a good proxy of retail interest, because gold is being driven by central banks. Silver is a good indication of retail coming back slowly to the space as well.
Sure. So you mentioned gold, silver. I believe you also invest to a number of junior companies that are in various different metals. So when you look at companies, so metals is it one of the only category that you look into? You also look at a few other factors too, obviously.
So I'm taking more of a private equity venture capital approach. So I invest with a time horizon that's very long, 5 to 10 years, and I'm looking for companies that have a chance, even if they're a small $20 million market cap, to become a mine. So I have a preference for precious metals, but I invested in copper and zinc and uranium, different projects. But really my attitude is let me find a project very, very early that has potential to become a mine. So I'm pretty agnostic when it comes to commodities, more about the project quality and the attributes of the investment that actually has a chance to become a mine. Because most companies, as you know, will never become mines. So I'm really looking for those 1 in 100 stories that could become a mine, and how to identify them early on. That's how you make really exceptional returns in this sector.
But you also invest in subsequent financing too, because you support it early.
Yes.
And you also, when you see certain things happening that you like it, and then you probably invest more, right?
Correct. Typically, I'll put 1% of my capital, total capital, in the initial investment, and I'll go up to about 5% of my book capital in that investment, hoping that I can go up 20 to 50 times. If that happens, it's about 100 to 150% of my total portfolio return. Those winners pay for a lot of mistakes. So I'm going to invest early. I support the company based on their execution, their business plan, with subsequent financings, and hopefully they grow up to be mines, which is where you really make a lot of your money in the space.
Yeah. So I don't want to say like favorites, but you invested over 25 companies in the market. But I don't know what is it one of the favorites, or which give us 1 or 2 names that you believe is not really the public haven't seen the potential yet, but you feel like this has a lot of growth potential.
Perfect. So I would say I get that question all the time. My always answer is, what are you looking for? If you're looking to make 20 times your money, it's willing to accept that you may lose all your money when you invest in these stocks. If you want to make 100, 200, 300%, maybe invest in a more developed company that has already crossed the bridge of a producing mine. But I would say 2 companies that are under the radar. One is actually here at your conference today, Big Ridge Gold. It's a $50 million market cap. It's in Newfoundland. I think it's got a real good chance to become a producing mine, but investors don't know much about it. And then the rare earth space, I don't know if investors care about that, but rare earths is very, very popular right now, a very extremely hot sector. Geomega is another company that I think is really, really interesting. They have a technology angle to extract rare earths out of bauxite tailings, so taking basically mine waste and turning it into rare earths. And they also have one of the largest rare earth deposits in North America, Montreal. So the 2 that are really under the radar, small caps, higher risk obviously, but have potential to do really, really well for investors.
So my last question is, you're a fund manager yourself. What if a high net worth individual want to participate in your fund? Is there a way to invest into your own fund?
Yeah,
as well?
so I don't actually have a fund. All the money that you see me investing is my own personal capital. Okay. I ran a fund for many, many years. I have lots of investors asking me to do it. Yeah. But I know the demands on my time that it takes and the duty it has to take other people's money. It's different responsibility. Yeah. The best way to follow me would be on YouTube. I'm very public about what I invest in. But again, I would advise your investors, don't just buy one. My approach is diversify over 20, 25 companies, but do your homework. And there's a lot of information that you do very well as well, educating investors on companies and potential investments. But following my work is a good place to start. One day maybe I'll start a fund, but right now it's based on my own capital. So
one last question before you leave. You say it's still quite early in the game, in the bull market. Why do you think that? Why do you think we still have ways to go for this kind of market?
So I would say if you looked at the total global wealth invested globally in all things, real estate, equities, etc., 5 years ago it was 0.5% of that was invested in gold. Very, very small amount, right? Yeah. Today maybe it's 2% of that money globally is in gold. But the central bank balance sheets have 25% or more of their reserves in gold today. So the investing public is far, far behind the central banks, which are really the smart money. They know where the world's going. The thing I would say too is the top 50 gold miners in the world. If you got the 50 biggest gold mining companies in the world are a $2 trillion market cap. That's less than 50% of NVIDIA's market cap.
Yes.
So those two data points tell me it's very, very early. And gold is reasserting its importance as money in the financial system again. And so to me, that 2% is very, very low. And so over time, I expect that to go from 2 to 5 to 10. So that'll be driving investor interest. Obviously, we've had a big run. Corrections that we had on Friday are normal, but I still think we're very, very early in that investor interest and adoption cycle.
Yeah, so thank you for your insights here. Thank you for being here with us today.
Thank you very much.
Thank you, Mike.